Hey everyone, how's it going? It's been a few days since I've been on the post market live, so it's good to be back with you guys. I'm currently in Europe, and the background is not the most pleasing. It's just in my hotel room, so that's why I have the camera off. And it's a little later in the night. It's about 10:30 p.m., so I don't want to disturb my wife while we're in the room. But it's good to see you guys. I hope the markets have been treating you well the last couple of days. I know we had a little bit of excitement. We had that drop down on Friday, right there, a little gap down, but we went back to EMA 20, and today we traded back up to EMA 8. So far the market is looking okay. However, volume is relatively low over here, even though it looks like it caught up towards the end of the day. But we're really not going to expect the real volume to come in until maybe tomorrow or Friday when institutional players are coming back from vacation. So we'll see what happens tomorrow. It's hard to read into the movement today because of where we ended up. We ended up basically right at the EMA 8, where it's at 643.55. We closed at 643.74. So that's just barely above the EMA 8. When the institutional players, when the senior traders come back, it could trade either way. Now, the one thing that makes me hesitate a little bit is that we had this little bit of tiny, tiny baby gap up and then trade upwards. And that is almost exclusively because of Google. Google had a huge gap up and then run upwards today. So that is up 9%. And for a stock that is as big as Google, that is a huge single day movement. Because of this gap up and run, we got a gap up in mags, not as much of a run, but we did get a gap up in movement in mags. So without Google to help the market along tomorrow, who knows what's going to happen? That was a single piece of news. It was basically they got a favorable outcome from a lawsuit. And that was really good news for them. And so that's why that happened. Now, again, so for SPY, what did that really amount to? It amounted into a half a percent movement upwards compared to the 0.74% gap down. Okay, neither of those numbers are actually really all that big. So the normal movement in the SPY is about 1%. It stays within 1% day to day on about 75% of the time. So for it to move up half a percent because of that Google news, Google went up 9%, Mags went up, I didn't see how many percent, but Mags gapped up on that news. So it's actually not as bullish as it seems, this movement upwards on the SPY, even though it made it above the EMA 8. We don't know. We don't know if that's going to continue because Google's not going to make another 9% move tomorrow. It might make a 1% move. It might make a 2% move. It's not going to make a 9% move again tomorrow. And most likely at some point relatively soon, Google is going to pull back because that's too much of a move for it to just keep on running. So normally we gap up that huge amount and we have a run, then we'll flatten out, or we may pull back a little bit, trust that low, maybe fill in the gap. Or it will consolidate sideways for a while and then break out upwards. And the slightly less possibility is that we have very tiny bars slowly moving upwards. Okay, so we're not going to expect Google to gap up again and run up another 9%. And therefore, if we didn't have Google today in the SPY and that bringing up the other mags, what would have happened today? We probably would have chopped sideways on that EMA 20 or maybe even headed a little bit lower towards that MA 50. So I'm not super optimistic that we're going to really run tomorrow or even be able to challenge the previous all-time highs. At best, my best case scenario, again, I could be completely wrong about this, but because who knows, maybe a whole bunch of money comes into other names. But if we're looking for the same catalyst today to continue into tomorrow, it's not going to happen. It's got to be some other catalyst that carries the day and allows this to continue to move. If it's going to move significantly upwards. If it's just going to chop sideways, then whatever. It doesn't, right? It could easily just chop sideways on its own. Doesn't need any sort of catalyst for that. And then if the big boys in Wall Street come back to their desk tomorrow and say, hey, I really don't like what's going on over here. I think this would pull back. It could pull back to the MA 50. That would be 100% normal. It wouldn't be a big deal. It would just be a couple percentage points downwards. Where are my drawing tools? That's weird. What's going on here? Where are my drawing tools? Interesting, interesting. Let me try reloading. There we go. That's better. Okay. And then after I get this point across, I'll say hello because we started a little bit late. I just want to give some people some time in to come, some time to come in. So let's see here. What were we looking at? Oh, I had to drop to the MA 50. It's not going to be that significant. So we go over here. We say if it starts there, go to MA 50. That's only 1.85% move from where we are right now. So tomorrow, not to say that it's going to hit that tomorrow, but right now, a move back down over the next few days, over the next week to that MA 50 would not be unprecedented. And then we could see if it bounces off that MA 50, which in my opinion, it would be a pretty good chance of it to bounce off that MA 50. Look how close we are. If we look over here since April, we spent a lot of time far away from the MA 50, getting closer and closer. Now we're pretty close. So if we look at previous run-ups at the beginning of it, so this is the first time the long-term trend reverted to the short-term trend, just like over here on April, this was the long-term trend, the MA 50 reverting to the EMA 8, the short-term trend. That's not what we normally look at. That's the beginning of a trend. So what we want to see is the continuation of that trend. And over here, that's where this was the beginning, the long-term, the MA 50 matched the EMA 8. And then what we saw here was actually pulled that back through the MA 50 down to the MA 90 or 100. And then a retest of the MA 90, and then actually it did it again. And then it spent a couple times bouncing off of that MA 50. Actually, this run up, it bounced off of the MA 50 several times before it broke downwards. So that's what we're going to look for right here. So even a break through the MA 50 wouldn't be a huge deal at this point. Let's just check on that MA 90 just to see how far that is, because that might be a little bit more, because that's kind of far away right now. We'll just see that might be more of a significant move. And that's 5%. That would be a normal pullback. That's still normal pullback territory. So for now, I'm not looking at that MA90. I'm really just looking at that MA50 or perhaps this quarter to date, or was this triple witching to date VWAP. It's anchored VWAP. So uh, it wouldn't be a huge surprise if we pull back there. Now, would it be a huge surprise for us to move up to all-time highs? No, it wouldn't be a huge surprise, but there's got to be a catalyst. So last week we talked about how, there's not really any huge catalysts left in this market. Earnings haven't been doing it. We basically have priced in everything that the Fed is expected to do at this point. So we can check that real fast after this. Check the Fed watch, see what that percentage still is, because after those CPI, or not the CPI, the PPE reports on Friday, that might have changed a little bit. But we'll see in just a moment. So let me say hi to you guys. Please talk about the trade in the morning payout today. Well, I cannot talk about program trades in a public forum, Joanne. So unfortunately, I cannot do that, but I will send an update to all the members. Okay. Biggest question of this evening in Europe, should we apply stop? Okay, again, morning payout plan. That's a specific paid program, so I'm not going to talk about that in a public forum. So I will update the members on that. So after we're done with this, so this will take another 30 to 45 minutes. Then I will update the morning payout plan members. Okay, so just be patient with that. Hi, Sunita. Hi, Roger. Hi, Becky. Hey, Tim. Good to see you too. Becky, newbie here, can't figure out the auto close for MPP. I will just enter manually pre-market tomorrow and monitor it. Okay. Yeah, Becky, just wait for the update that I'm going to give after the post-market review. Hi, Zila. Good to see you. All right. Okay, so let's take a look at that Fed watch. Let me move these Zoom tools out of the way. Hi, Kirk. Good to see you. Hey, Peter. And let's take a look at that Fed watch. Do I not? I don't have it open. I don't have it open. Okay, so Fed watch. Spelled that wrong. I'm using a different computer than normal, so I don't necessarily have all my links super ready at hand. Yeah, so we're priced at 95.6% certain that there's going to be a rate cut in September. So that hasn't changed. There is not a lot of catalysts that can bring this market higher at this point. So it does seem fairly imminent at this point that we're going to at least have a mild pullback, at least that maybe 2%, maybe 5% pullback down to the MA200 would only be, it looks like probably about 8-ish%. 7.6%. So none of those would be a huge deal. That would not represent a break of the trend. It would just be a pullback in this relatively new trend starting in April over here. So we're not going to freak out if any of that happens. Of course, you don't want to be massively long right now, even though we should be net long in our portfolios. You don't want to be massively long because if it does pull back 7.8%, that could hurt a little bit. But down to the MA50 minus 1.85%, that's really not a big deal. Right? Hi, Illinois Green Farmer. Good to see you. Hi, Cosmic Spiral. I've been making 30% gains on NVIDIA since last week using single put options. Maverick is really helpful with your trade. Oh, that's great to hear, Tim. That's great to hear. So Maverick is my proprietary indicator that I developed. Follows the market maker's future expectations. So you've been puts using single put options. So it sounds like you've probably been selling puts. Oh no, this is Uber, NVDA. And let's see if we've gotten sell signals. I'm not sure if you went long or short. Looks like you probably went long. Yeah, yeah. But I'm glad that's been helping you. That's awesome. That's great to hear. Okay. Okay, so let's take a look at what's going on in the market. So we know that we're still in an uptrend. So far, it's still strong. We sort of broke below that EMA 20, but we recovered very quickly. But again, because of where we are positioned in the market and because there's not a lot of catalysts that we can see for it to go higher, our expectation should be that it could pull back to that MA 50, which really would just be a wider range chop. So right now, if we draw this box right here, okay, it's just been chopping in this box for actually quite some time. So if I were to draw this, there are what we would see is, let me get a drawing tool. Okay, so we see this kind of movement upwards, and then this looks like potentially a topping. At the very least, it's a consolidation. So after consolidation, then our expectation should be that maybe this or maybe this. Okay. That and then pull back. If it does that, then that MA200 over here is our first backstop. If it does this down to the MA200, then this is just a little bit of profit taking before the next leg up. But if it breaks that MA200, then that's a break of trend. And then this is the new bearish trend. So let's see how that looked in the previous. Oops. So let's go to replay right here. Right, so you see how that is kind of similar. Where this was up, up, up. And then here it starts to chop sideways. I didn't draw that perfectly, but you get the idea. Started to go sideways. Let me go back one. I go back one. I don't have all the same layout as I'm used to. Apologies. All right, I'll just clear that out and draw it again. So here is basically where it started to go sideways. And then we were basically up over here. And so over here, based on what I said earlier, when we're consolidating, either we consolidate long enough and then it goes higher again, or it breaks downwards. The difference right here is you see over here, it actually crossed that MA50 several times. And we haven't done that yet on currently. And then at some point, it breaks below that MA200. Okay, at some point, you're going to see it do something like that. And then that would be the start of the bear trend. Okay. And so let's take a look at that. It's not the technical start of the bear trend, but that's when we can be for sure confirm that that bear trend started. So that's the beginning of that bear trend. Okay, so you're up and you chop sideways, you go down a little bit, then you break through that MA200. Now we can be more certain, this is about as certain as we can get, that this is the beginning of a bear trend. And it doesn't have to be a super long bear trend, it's just a bear trend. You see it goes back, it tests that MA200, so it does this, retests that MA200, and then if it is a true bear trend, then it's going to go back down. If it's just a fake out, then it will go back up. But most of the time, it is going to go back down. So we'll step forward over there. Okay, you see that? And it did exactly that. It hit that MA200 again and went back down, and then it really dropped. That was Liberation Day. But by the time Liberation Day happened, it already was below that MA200 and it was already in a bear trend. Donald Trump just did us a huge favor and said this bear trend is going to be over really, really fast. Okay, that's basically what he did for the market right there. Even though it was a huge drop, it ended up recovering very quickly because he backtracked, right? He said, oh, 90-day pause. And then he reversed because of that. And that's why we call it the Trump put. Because the Trump put is the sense in the market that Trump is going to say and do things to prop it up so that it can't fall too much. And that's exactly what he did. And then we have this. And then what would we have? We cross back above that MA200. And that is our indication that we are on another bull trend, okay? And what happened right here at the same time is almost the exact same time that the MA50 is starting to flatten out and curve upwards to match the EMA8, which I told you at the beginning of this call was the indication that it's the beginning of a trend, right? So we have different ways of measuring the beginnings of the trend. So here we have confirmation based on the MA200. We're about to get confirmation based on the MA50 reverting to the EMA8. Okay, and of course, really it started way over here, but if you try to call it right here, you have very small degree of certainty. When you call it over here, you have a very high degree of certainty. You'll never have 100% certainty unless you're looking back like 2 years ago and you can see the entire year's chart. That's sort of cheating, right? That's not very useful to a trader. So for a trader, you're never going to have 100% information. You're never going to have 100% certainty. But at this point, you can be 80 to 90% certain that this was the change of trend for a upward movement, okay? So we come back, retest that MA200, just like we broke, test the MA200, went down, broke, test the MA200, and now we're starting to go up. Until we get to today. Okay, so, oops. Until we get to today, it kept on going up. It was bounced off the EMA 20, went back up, bounced sort of off the EMA 20, went a little bit through it, then bounced. Now it's through the MA 20 again. And so what we can probably expect, okay, and it's not going to be a big deal, is that I'll come back to that MA 50, maybe, or it'll go up and match that all-time high, or maybe go slightly above it. But right now we are in this up and then consolidation period. And what we're based on what we just said, this consolidation period isn't quite over yet. The sign that the consolidation period is over is that the EMA8, the EMA20, and the MA50 are basically right on top of each other, and price keeps crossing all three of them. That's the consolidation. That's towards the end of the consolidation period. Just like right here, the EMA8, the EMA20, the MA50 are all roughly in the same area, and we keep chopping through it. And then finally, we broke down. We didn't have to break down. We could have broken up as well. Okay, so over here, we are also EMA8, EMA20, MA50, all roughly in the same area. But you see, they didn't stay there. We didn't get this long sideways period. And so we crossed through it and then we just kept on going up. That was a continuation of the trend. Over here, you can say maybe this was sort of the very short consolidation where it chopped through. Okay. And then over here, okay, over here is another consolidation period. Right. So we are getting towards the middle to end of this consolidation period. Sort of started right here a couple weeks ago, and then soon that MA50 will come up, and then we'll cross it. That'll be consolidation period. Again, it could break down or it could break up from there. At that point, depending on how long it consolidates, that MA90 may get up there, that MA200 may get pretty close to up there, kind of like this. By the time we broke down, that MA90 was pretty much in that cluster as well. And then we broke through it and then broke through the MA200. We didn't have to break through the MA200. We could have bounced off of the MA200 and continued onto a longer bull trend. But in this particular case, we broke through that MA200. So right now, I'm not expecting a huge movement upwards or a huge movement downwards. We're in this consolidation period in the markets. That's going to make it really difficult for directional traders. So if you like going long calls or long puts, you're going to have to pick your stocks very, very carefully, that they need to be able to run on their own. They need to be super strong. for the long side or super weak for the short side. So I'll give you an example of a long that I was looking at today that I actually like quite a bit. You see that when the whole market is consolidating sideways, this thing just keeps on running, keeps on going higher and higher. That MA50 is still relatively far from the EMA 20, and we just keep bouncing off of the moving averages over here, or the anchor VWAP. So FUTU is very, very, very strong. It's definitely outperforming our relative strength. That has stronger relative strength than the overall markets and can keep on running higher. So this is an example of that. But for the overall markets, we're just going to keep on expecting this chop sideways for a little while longer. Okay? Hey, Kay, good to see you. So I don't see any questions or comments about that. So it seems like you guys are following along pretty well. So let's take a look. So in this consolidation period, what do you want to see? Well, if you still want to trade directionally, then you absolutely want to be in the strongest sectors in the strongest stocks, or in the weakest sectors in the weakest stocks. But since we're still generally in this uptrend, we would prefer the strongest sectors and the strongest stocks. Before I do that, I just want to make sure there's no major catalysts, that I'm not talking through, putting my foot in my mouth about there being no major catalysts. But I can't think of any. Even if I look at the economic calendar, there's nothing that comes to mind that says, hey, that could be a major catalyst. Not GDP, not CPI, not PPI, not consumer sentiment. None of those things are, even if we had that report, I wouldn't be calling it a major catalyst at this point. So let's take a look at our economic calendar, just to be thorough. I could be wrong. Maybe I'll see something on there and be like, oh my God, I can't believe I forgot about this. So let's go to Econo Day. Or I guess US Econo Day. And tomorrow, ADP. That's not going to be anything. Jobless claims hasn't really been doing anything. Although if we get really weak jobless claims, that would mean that the Fed would want to prop up the market, but we already know they're doing it. Basically, the market has already come to the conclusion that they're going to cut rates anyways, so it doesn't really matter if it comes in really weak. And then productivity, at some point, we are maybe potentially going to get a surprise in those jobless claims numbers, because right about now or in the next few weeks is when we should expect that the numbers for all of the Doge firings should start to hit the reports. So if all those federal workers did not find new jobs somewhere in the market, then that's when they'll start collecting, or it's the unemployment. And so that's when they're going to hit those jobless claims numbers. And so we may see a little bit of a surprise once those jobs start, when those people start hitting these jobless claims numbers. And yeah, none of this. And then the employment situation, there's always a little bit of volatility around the employment situation. It's kind of, this one's always a little unique because it's also coming on a holiday week. So first Monday of September is always Labor Day, and the first Friday of every month is always the employment situation. So we get this report in an environment where we expect fewer institutional players because of the holiday. And so we always get a little bit of volatility, especially on this September report. But I wouldn't, again, we're probably okay. I don't think those Fed workers are going to hit the reports until probably the next report. Yeah. So again, not really seeing any major catalysts here. So we're going to just expect more chop sideways, not huge movement, but we could have high volatility chop. So we got to be careful about that. So we could have larger intraday ranges, or larger candle, well, actually that's the same thing, larger candles, larger intraday ranges, or little baby gaps, and then not a lot of movement. All the movement happens in the overnight session. So we gap and then we kind of move in a limited range, all of that is characteristic. So basically, what we saw on Tuesday was a larger range movement, and then today we had a gap and then a smaller range movement. So both of those are normal in a sideways high volatility trading environment. Okay, let's take a quick look at gold. Gold is a breakout story. We were talking about this. I don't remember when, but I drew this wedge. I talked to you guys about how it was consolidating sideways, and at some point it would break out, and it did break out basically on Friday, and then over the weekend really just broke out Tuesday, and then today continuing. This is really aggressive, so we're going to expect that to pull back a little bit or consolidate pretty soon here. I wouldn't be chasing in on this if you didn't get in on this move. We also talked about GDX, the gold miners, where that was still that was exhibiting a great uptrend, and the EMA8 would be a great opportunity. So Friday was a perfect opportunity right there, right at the EMA8. You would have caught all this entire move. Right now, that's also not encouraging for the market, right? So if all this money is going into gold as safe haven, then that is not screaming a lot of optimism for the market. So I'm not really going to expect this to go flying higher. Maybe over the next week or two, it could match that all-time high, but I'm not going to expect it to break significantly beyond the all-time high. So that gold is just reaffirming the viewpoint that we're now entering a consolidation period. Maybe today's not the day, but at some point, can you view your stock fetcher sector scan, specifically which each column header means and which columns you prioritize in your analysis? Sure, I can do that. How do we trade the gamma pocket chart at the high bar or lower bar? I'm not sure which bar you're talking about, Tim. The gamma pocket chart. Are you talking about Thinkorswim? Because the software is not out yet, so there's not really. You're just gonna have to clarify what you're asking, Tim. Okay, Phil. Let's see. So I was just about to go and look at sector analysis anyway, so we can do the stock fetcher scan. No problem. Okay, so my stock fetcher scan, it really isn't that different than Roger Scott's. My sector scan uses his as the base route, but the major difference is that I have more columns. I look at a little bit shorter term. So basically what we've got here is all the sectors, and we've got the 1 week, 2 week, 1 month, 2 month, okay, the week to month ratio, the 3 month, the 6 month, the 10 month, 11 month, 12 month. Then we've got this average percent, and then average percent, I believe, is across, is it all the months? Let me just confirm. Average percent, average percent. Obviously, I don't use the average percent that much. Otherwise, I would know it off the top of my head. So it's not going to be super important for you to know the average percent, but I might as well tell you guys. Average is 1, 2, 3, 6. Okay, so it's a shorter term. So it's this. It's the average of all of the shorter term ones. And then we have the main average percent, that'd be 136. And then the long-term average percent would be 10, 11, 12. Okay. So which one I use depends on which viewpoint I want to see. So if I want to see what has been the strongest sectors over the last, say, 6 months, then I will use the main average percent or the average percent. But basically, I use the main average percent. If I want to see longer term, then I look at the 10, 11, 12. I'll use the LT average percent. If I want to look at shorter term, then I'll look at the shorter term average percent. And if I want to see a specific time period, then I'll sort by that specific time period. So if I want to look super short term, then I'll look at this week. or even today. Sometimes you see me do that. So if I look at the past week, gold and silver by far outstripping everyone because of the huge moves that it made over the last couple of days. But it looks like biotech, surprisingly, has been pretty high up there as well. Communications still receiving some attention, same with commodities. And this is also biotech energies. What we don't see leading is all the growth stocks. We don't see MAGs, we don't see QQQ, we don't see technology, we don't see SMH. So that is another reason we shouldn't believe that we're going to keep on running into all-time highs and even higher, is because we don't have the normal growth sectors supporting this in the short term. We're looking at 1 week right now. If I'm going to make those types of conclusions, though, I really should be using one of these average percents. So I could use the short-term average percent, same story, same story. Like, home builders and retail are up there. That has to do with interest rates as well. Cheaper credit card rates, for example, cheaper mortgage rates. So the home builders are generally very good at forecasting the economy. So if they're doing well, if they're building, then longer term, we shouldn't expect too much turmoil in the markets, in the stock markets. But maybe 2026, that might be a different story. But at least for the next several months, we really shouldn't expect anything too wild out of the markets. Well, so basically, I'm not expecting a bear market in 2025. Surprisingly, there's only three, 4 months left in 2025. It's gone by so fast. So, so then I can go and I look at my main average percent. It's called main for a reason. That's the one I look at the most. All right, and we see that the aerospace defense is still up there. We have gold and silver. Now we have SMH mags and XLK and XLC. So that's more normal. It's not normal to see gold and silver up here along with those guys. So we still have a little bit of a mixed weirdness in the market right here. And so if I look at my long term, then I can see, well, actually home builders is exceeding even the SMH and MAGs. And then biotech is right up there. So we want to see on the long term or the main average percent, we really do want to see the tech companies leading. So the data that I saw over the weekend, and I need to find the source because I can't remember right now, was that for the first time, something has exceeded consumer spending in terms of effect on US GDP. Right, so consumer spending has always been like 70% of US GDP. And what has exceeded it now is investment into AI tech. So AI tech is now driving the US GDP more than the consumer is. So you may recall last week, I was saying that we're not really going to care too much about the consumer sentiment at this particular point in time. We're going to care a lot more about rates, and we're going to care a lot more about credit, because credit is what fuels industry growth. It fuels company growth. It also fuels your consumer's ability to spend, but more importantly, it fuels the company growth. And if you have the tech companies, they will fuel themselves from some debt, for example, borrowing from banks, but more likely they're going to fuel themselves by issuing bonds, their own corporate bonds. For example, Apple issues tons of corporate bonds. That's going to be their main driver of raising capital. Or even if you have a startup company, we're going to ask, hey, I've got $1 million or $10 million or $100 million to invest in a startup company. What can I expect it to grow at, and what kind of return can I expect? Because that risk is way higher than if I go and buy a bond. If a bond is paying me 10%, that company has to do amazing, amazing things. It's got to pay me maybe 100% for me to be able to consider to put my 10, 20, $100 million into that company, because the risk of that startup company is that much greater than the US Treasury. So if their US Treasury is only paying me 2%, well, almost anything's better than 2%. Okay. So a startup company may only have to pay me 10 or 20% for me to consider it. Right? So that rate, that interest rate is going to be a really important driver of whether or not the economy continues to expand. And right now, the AI investment is driving. So like, for example, NVIDIA's and Palantir's of the world are really driving the US GDP more now than the consumer is, which is pretty crazy to conceive because my entire life, it's always been the consumer. Let's see. Do I do any BTC charting? I do look at BTC, but I don't. We can take a look at BTC. I'll take a look at it in just a moment. When I send it on Telegram, when I send the gamma levels on Telegram, okay, so let's go back to your original question. How do we trade the information on the Telegram channel? Okay, so last week I did talk about that because we got that question also, but I can go over that a little bit either today or tomorrow. We have about 15 minutes left. I don't know if that's enough time to really give a thorough review, but I can go for that. May I ask why the alert for SPY hit this? Okay, Layla, is that your name? I don't know if those are I's or L's, but I think it's Layla. I already told a few people here that I cannot discuss member programs in a public forum. So after I'm done with this, I'm going to update everybody in the morning payout plan. I'm going to update everyone on the trade. Okay. So just be patient. I will answer that question after I'm done with the post-market review. What are the main significant signs you will be looking at for when the market will be flipping bearish or tops are forming? Geenam, I already kind of answered that. It's a SPY. We are in this consolidation phase. Okay, so we've been going up. Now we're chopping sideways. And what I'm going to look for the end of the chop is a break. So I'm going to look for these moving averages to all converge, for it to trade for price to trade across those moving averages for at least a short period of time, and then break below the consolidation range. So right now, or above the consolidation range. And right now, that consolidation range is this. Okay. So if that continues like this, at some point, we're going to break down or up out of this box. However, this consolidation range may change a little bit because as this MA50 goes up, this consolidation range might shift up a little bit. Okay, and then we'll keep on crossing it, and at some time we'll break. So maybe a good way to answer that is to go back just like we did last time or earlier. We go back and replay, and I'll show you. Okay, so over here is where the moving averages converged, right? And it looks like we're starting to consolidate. The main difference here is that we went down and converged. So our moving averages, our short-term moving averages, EMA8, EMA20 are moving downwards. But all three, the MA50, the EMA8, the EMA20, they're all right here in this range, and I'm crossing all of them back and forth. Now I hit this MA90. Okay, so if I break significantly below this box, see, we've been consolidating through this so far. Okay, so we're going to walk through, see what happens. See, we bounce right back up. Okay, so I'm still consolidating here. I'm still crossing back and forth across that MA50, the EMA8, the MA50 or EMA20. I'm now using my MA90 maybe as a support, but that MA90 looks like it's about to join the crowd, and I'm going to be crossing 4 moving averages. Okay. Okay, is this a break of the box? Nope, it's not a break of the box. So now I'd move this a little bit higher. There, I broke the box, but I found MA200 support. So does that count? I'll bring this down a little lower. I probably should have when this one happened. Okay, so that doesn't really count. We're still in the box. So we closed inside the box. That's what the more important than the tails is that we closed inside the box, but we did bounce off of that MA200. Basically, we didn't quite hit the MA200, but basically, and then we keep going and bam, we broke. Change of trend. Okay, that's my confirmation of the change of trend. Some people would argue, well, it really started here. This was the high. Okay, fine. But you can't really call it there. You can't really have a high confidence that this is a change of trend. Here, I have a very high confidence. I have an 80, 90% confidence that this is now the bear market. Okay. And the normal pattern is we break, we retest, we go back down. And since we already went through it today, earlier today, we know that that's actually what happened. Went, broke, and then it retests it right there, and it breaks back down. Okay. Bear market. So that's what I'm going to be looking for now. Where are we now in that process? We are basically over here. Okay, because our MA50 is still rising. We're still above it. We haven't pulled back to it yet. So we still need to pull back to it. We still need to start crossing it back and forth for a little while. And maybe a month or two before we are done crossing through it, and then we actually break. Okay, so we're not imminent in any way, shape, or form to a breakdown. And then because we are still in this uptrend, it is possible, just like it was sort of possible right here. We did make new all-time highs. At each of these points, it was possible that it could have broken up to the upside and would have been a continuing of the long-term uptrend. But it just so happened that this time that's not what happened. It was consolidation and it broke down instead of breaking up. Okay, so right now we're over here. Oops. Right now we're over here. And maybe it'll break up. There's no guarantee that it's going to break down. All I can say is that we're right here, and it looks to me like we're probably going to do this. And then after we do this, I don't know if we're going to break down or break up. Okay, all I can say is that it looks like the next few weeks, maybe next month or two, looks like this to me, based on where we are right now. Okay? Hopefully that answered your question. Let's see. Can we have a special price for option strats? I've never seen it go on sale. So if I see it go on sale, I'll alert everyone. But I haven't seen a sale recently. Okay, and then so we answered the sector thing. We answered the okay, so Bitcoin, and then if we have time, I'll very quickly go over the Gamma Pocket. Yeah, so I'll delete this and remove the replay. Okay. And then let's go to Bitcoin. As long as it holds this blue line, I don't see anything wrong with Bitcoin. And then even if it breaks, it has its MA200 right here. So I wouldn't be too concerned about that. Right now, Bitcoin is pretty highly correlated to the S&P 500. So chop sideways. That's what it looks like to me. Chop sideways in this box right here. Okay. And normally, or at least lately in the last year or so, gold and Bitcoin have been inversely related. Okay, so gold, we said, kind of moved a little too much too fast. It's probably going to pull back at least a little bit. Okay, so if that happens, Bitcoin might come up to its MA50 or to this consolidation range right here. And then we'll see. Maybe it'll bounce right back down and gold will go up, or gold will continue to move back down and Bitcoin will move to the top of the box. In any case, it does look like chop for now. There's no directional movement here. Okay. Why did Salesforce go up when earnings, or go down when earnings were up? Okay. So that's the fallacy of earnings. Everyone thinks that if you have good earnings, then it should go up. We like to make that logical sense. But you have to remember that Wall Street operates on um, future projections. It doesn't operate on right now. So when we look at the price, we look at CRM. Hey, it's trading at 256. We thought, great, and maybe it'll trade higher. Okay, if earnings does really well, we'll trade higher. But what you don't realize is that the reason it went from 228 to 256 is because Wall Street projected in the future, they expected that the price would be 280 or 300 or 350. That's why you always see these analysts' expectations, right? Analyst ratings. It's always a price that's very far away from where it is right now. So Wall Street is trading based on that price, not on the current price. So if we're expecting it to be 300, and then now with new information from the earnings, even though they're really good, my projected value is now 290, then it has to drop because it's not as high as I thought it was going to be, my future projection. So it's not actually earnings. It's what does earnings do to my future value formula. And another really important number in that future value formula that people don't realize is interest rates. Interest rates are part of every single financial equation. People don't realize that. And so when there's a change in the expectation of interest rates, valuations change drastically, wildly. So that's why the interest rate is one of the most important, if not the most important. That's why the bond market, following the bond market, is super important to understanding movements in the equity market, because bond markets are the interest rate. They're the long-term interest rate and they're the short-term interest rate. T-bills, Fed funds rate, 1 year, 2 year note rate, 5 year, 10 year, 30-year note rate. We use all of those rates in all financial calculations. So let's see, if I go, was it present value formula? Okay, right there, that R right there, that's the interest rate. Okay, and then now if I do future value, if I do future value right there, the R is right there. And so what the Wall Street is going to do is they're going to take this future value minus the present value, or just look at the future value, right? And they're going to see how much profit is there and whether or not they're going to go into a stock. Right? So if the earnings changes the future value, even if it's positive, if it changes it to a lower value, then Wall Street is going to dump. Okay, so that's why you're seeing that drop in the CRM. So somewhere over here, they surprised to the upside, they surprised to in the revenue as well, but somewhere in that earnings report and somewhere in that earnings call, they made Wall Street believe that the future value isn't as high as what they thought it was 1 or 2 days ago. Okay, that's the only reason why it would dump. Okay, does that make sense? Getting gamma, I did not see it hit 6445 and went way lower. Okay, let's see. Let's see what gamma did today. Okay. So around, was it 8 a.m.-ish? Okay. What did I say? Let's go back and see what we said. Okay, we said, look at these spikes right at 6445 and 6450. Okay, this was at 7:55 a.m. Los Angeles time, That's what all these charts are on. So right here, right at the peak, we said, hey, 6,4, and that's 6,450. Okay, so we went a tiny bit above 6,450. We rejected it, and then guess what? We just came right back to 6,450. Okay, so what I said in the morning was like, hey, we have a limited range. We're concentrated at a price. If we're concentrated at a price, unless the picture changes later in the day, we are pretty high confidence that we're going to end pretty near that price. So we were at 6,445, 6,450. Where did we end? 6,448. So we pretty much nailed it based on GEX at 8 a.m., an hour and a half after the market opened. It had all day to trade, and yes, it did trade down, but it came all the way back to here. Basically, we nailed it on the dot. So so actually we did great. So the question was, how do I use that information to trade? So how I would have used that information to trade this morning had I not been occupied doing many other things and meetings and whatnot, then what I would have done personally, what I would have done is I would have done a butterfly right around 6,445 to 6,450. Okay. So you could do a butterfly, in which case, if you end up nailing butterfly on the dot, that's a really high reward risk ratio trade. But if you're at 6,4, if you see us at 8 a.m. or 8:06 a.m. and you see that we're at 6,453 and then we see 6,450, you can do a pretty high conviction trade and almost get, so if I could do 6,460 or 6,455, if I was brave and adventurous, I could have done a vertical, a put debit spread, 6,450 or 6,460, 6,455. I probably could have made 80 to 90% because we're so close to it that, hey, it stayed below. And yes, it did stay below. I would have collected maximum gain on that. So we could have do a put vertical right here. I could have done the same thing over here. It's like, hey, if I'm seeing support at that EMA 20, daily EMA 20 right here, it just, see that that's really strong support. It consolidated there for a really long time. So I could have done the same thing here. I could have done a call vertical spread. I could have done a 64.20 or 64.15. Sold that one and then bought the 64.10. And then I could have made 80 to 90% because of how close the price was to it at that time. And then we could have profited to there. So there's a few different, or you could have just bought a simple call right here. Okay, because we're say, hey, I think we're going to end pretty close to 6,450, 6,445. This is a pretty good distance. We're seeing a very strong support right here. Not only is it at the point where we closed yesterday, but we're also at this EMA 20 and we keep, it can't go below it. It keeps chopping sideways. So a call right here is not, maybe not a high risk trade. You probably don't want to do it necessarily 0 DTE with only half an hour to go. Maybe you buy 1 or 2 or 5 DTE, and then you could ride that all the way up. And then if you want a day trade, then you can just close it at the end of the day or near the end of the day when you see that it's getting very close to 6,450. Or you could close it tomorrow morning, but then you have additional risk, right? You don't really exactly know, but that's if you don't want the day trade, okay? So there's a lot of ways we could have used that information today. Okay, let's see. Hopefully that answered all your questions. Okay, you're very welcome, Tristan and Tim. Any stocks you think we need to keep an eye on? Well, we're basically a couple minutes after time, so I can't give you a huge list, but I did share earlier with you guys that I really like FUTU. If you're into more like penny stocks, this one's great. Okay, I wouldn't do options on this. I would just buy the stock. Okay, so this is looking like it's breaking out of that blue line right there. Obviously, it would went pretty high today and then traded back down. So that means it didn't run away. So tomorrow, relatively close to where the current prices or the closing prices, that looks like a pretty good entry. Again, I cannot advise or I can't make recommendations. I can just, I can tell you that I'm looking at it and I like it. I can share my opinion, but I can't advise you to buy it or go in or anything like that. So those two are ones that I'm keeping an eye on. SHLS, but only as an equity, not for options, and FUTU was looking beautiful to me. All right. All right, guys. You're very welcome, Pat. All right. So that's going to be it for today. I will see you guys tomorrow, Thursday. And then maybe Friday. I'm not sure if I'm going to. Actually, Friday I should be here also. I think my plane is on Saturday. So have a wonderful rest of your day. And for those of you in morning payout plan wondering, give me 15, 20, 30 minutes and I'll send out a video update or a text update. I'm not sure which one I'm going to do yet. Okay. All right, guys. Have a wonderful rest of your day and I will see you tomorrow.